May 17th, 2024. I thought that this was going to be a magnet. You can see we tried to rally to it later in the day, but we never ended up getting there. And I thought the reason that that was going to be a magnet is because it was actually a 50% pullback of yesterday. So yesterday's move down. 50% is exactly that close. It's also a bear channel here, right? So 50% pullback of the bear channel. And additionally, on the daily chart, a lot of times in situations like this, traders don't like to sell directly below the bar. They like to sell a 50% pullback of the bar. So those are all reasons I thought we were going to get there. This was a parabolic wedge, and we tried to get the reversal up. We did get a reversal up, but just did not go high enough. I thought it was going to be difficult to get all the way up to here after this sell off. Still possible, but we ended up not doing it. Bar one, a bear bar, but a big doji bar. It's a low one short from the surprise down yesterday. So we had a surprise down, a pullback, which is the gap up, and then a low one short. An inside bar on two, so it's a double top for the bears. We're probably going to trade below yesterday's low since it's a sell signal on the daily chart. But when you trigger a daily chart signal, what usually happens is the market pulls back and then it tries again. So you can see we did trigger the signal on 4, pulled back and tried again on 9. 3, a bear bar closing near its low, but 2 is your signal bar. And, bear trends do not normally start with bars like bar 2, so it's not really as good as it could be. Double top, so double top 1, 2, and then follow through 3, and we break to the new low of the day, or below yesterday's low to see if there's sellers there, and we get the reversal up on bar 4. Bar 4 is a possible low of the day, but it's not very good. Big tails on both sides. I'd rather wait. An inside bar, bar 5, so it's an IOI. Inside, 3 is inside of 4, and 5 is inside of 4. But so theoretically a buy above 5, but it's a doji bar. And if you'll notice we have 3 doji bars, 1, 2, and 5 in the first 5 bars. So it's really not all that great to be buying here. I think I would just rather wait and see what we get. For the bulls, I need consecutive bull bars closing near their highs, and for the bears, I want consecutive bear bars closing near their lows. A bull bar on 6, we're probably always in short from the gap. A bull bar on 6 with the tail on both sides, probably still more sideways. And then bull follow through on 7, but it's a really, really unimpressive bull bar. Bulls wanted something really strong and closing far above, probably the 1 high, honestly. It's really hard to look to buy down here unless you're buying low because bar 78 yesterday was so massive and climactic that any rally is probably going to end up being minor. I assume that we got to around a 50% pullback of the move down, maybe of the actual bar itself since it was so climactic. No, we didn't quite. So maybe the move. I think that we sold off around so the move down to towards the low of the day. I think we sold off around some sort of 50% pullback because of how strong this sell off was. So not really good to be buying above 7. I think you're buying high in what's probably a tight trading range with all the dojis we have in the open. 8, a bear bar. It was a bear bar reversing down from the moving average, which is good for the bears. However, not a good close. You know that 8 was on its low for most of the bar, and then in the last maybe 30 seconds got bought up and gave us the disappointing tail. So we have a lot of disappointing follow through for both sides so far. I think it's going to be a trading range. Additionally, you can see that the bar 7 low was probably a reasonable buy below, and it is a bull bar closing somewhat near its high, so it might end up being a magnet. So I thought we might have to get back to at least the 7 low, if not the 7 high. Especially after a disappointing bar on 8, I thought the odds were more likely that this was a trading range open and there would be buyers below 8 rather than sellers. You can see there were buyers, so we have bar 9. Bar 9 is a wedge with yesterday, so 1, 2, 3, and theoretically a buy looking for a swing, but it's a big doji bar. And do you really want to buy above the doji bar in a tight trading range? Not really. You're also buying towards the middle of the trading range if you buy it, so really not very good at all. Bad follow through on 10, a big tail on the top. Bears want 7 or 8 to be the start of their bear trend, or the move down essentially. Their argument, big sell off and then 1 pullback and then 2 pullback, 3. So 3 push pullback and then they want the sell off. But it seems more likely that we're just going to continue sideways here. 11, a big bull bar closing near its high. Good for the bulls, but not quite closing above the moving average, so not as good as it could be. I think bulls wanted to see more follow through. Or a better bar closing above the moving average and above the 8 high. 12, follow through for the bulls. Good for the bulls. I think okay to be long. We're always in long, but it could be always in long towards the top of the trading range, so you do have to be careful. Additionally, with how big bar 78, obviously, I'll turn the study on. bar 78 being this huge big bear bar, I thought that any reversal up was probably going to be minor. I did think we were going to get here, but I thought the probability was relatively low that we ended up getting some sort of reversal up just from here. I wrote in my notes, I thought 60% chance that we were going to get here today. This was during bar 12, or as bar 12 closed. I thought 60% chance we get up here today, but maybe only a 30 or 40% chance that we rally straight there from this move. So I wasn't really sure of the path. An inside bar on bar 15. Bulls, you might get out below, but I don't think Bulls have to with how strong the rally was up from 9 to or 10 to 13. 15, another inside bar. It's a high one. So it's an II high one for the Bulls. It's a breakout pattern at the top of the trading range. Bulls, they want to break out above and a swing up. Bears see this as, essentially we're trying to form some sort of double top up here and they want the swing down. And you can see when you ever get an II, it's usually pretty 50-50. Good for the Bulls that we had this, but the probability is not all that awesome at this point. Otherwise, we would be rallying faster. 16, a disappointing doji bar, so bad follow through, failed breakout above the 15 high, and you can see we got basically back up to the high tick of bar 13. So any bulls who bought up here were disappointed in this, and we're using this rally to get out. 16 is, I think the Bears see some sort of double top here, and they want at least a couple legs sideways to down. 17. A bear doji, bulls, they want essentially a double bottom, and they're hoping that this is just a two-legged correction, and then we're going to continue to rally. And the bears want this to be essentially double top at the top of the trading range, and they want to move down. What's more likely at this point? I think it's pretty neutral, maybe slightly better for the bulls because of how strong the rally from 10, 11, and 12, or 10, 11, 12, 13 was, but not really that sure. 18, disappointment. You can see we're still on technically the sell below 16. That was some sort of double top, but it's not really all that great. I think that probably more sideways. Do you have to exit directly below 18? I think it's okay to get out a point or two below 18 instead of directly below. Maybe if how small the daily range is, maybe 1 point below 18 would make a lot of sense because you don't really want to sit in it and just watch 19 happen. The thing with trading ranges is risk gets big really quickly. And so the problem with buying 12 or 13 and putting a stop below 9 is that you're going to get stopped out, and or when you get stopped out, that's exactly where traders will probably be buying more. So you can't really take the buy and just throw a stop down there. Huge bear bar 19, good for the Bears, but I don't want to take the sell. I think it got too big too fast, and to me, it just looks like the bottom of the trading range now. 20, a bull bar closing near its high. It's a triple bottom, 1, 2, 3, but you're buying in the middle of a trading range. And you have a really big bar with really big risk. So big risk in the middle of the trading range is not really going to be a very good trade because the probability is not as good. Alternatively, the limit order traders who were selling above here had, a big reward potential. I don't know where you put your stop if you're selling, maybe above here and then get out if there's any sort of bull bar really, but a reasonable probability. So I thought, I thought it was hard. I wouldn't sell above 20, but the overall point I was making is that it's not really great to be buying above 20. And when the bar is too big, sometimes traders try and buy the 50% pullback. Maybe we did get a 50% pullback of the actual bar. Yeah, so we got a 50% pullback of the actual bar of bar 20. So bulls, they buy the 50% pullback, and then they scalp out at the high instead of buying more. Why are they scalping out at the high? Well, if you bought 20, so imagine you just bought above 20, right? Is 21 the follow through you really wanted to see? No, it's not. You wanted to see another bar that looked pretty much exactly like 20, but instead you got a disappointing doji bar. So what do the traders who bought 50% pullback do? Well, they have like no true risk, and they can just scalp out at the 20 high after 21 with their 2 point a point or so profit, maybe a point and a half. So what they'll do is they buy the 50% pullback. They're hoping that 21 is going to become a massive bull bar and they'll get a swing, but they know that more likely it's just going to be some sort of sideways disappointing bar like we got on 22 or on 21. So they use this rally to scalp out up here, and that's what's causing the selling on 22. 22, it's a low one short for the Bears after a big bear bar 19, a pullback, and then a low one short 22. Would I sell 22? Probably not. I think you're selling, a bad low one. But if you start to get follow through, you can look to sell. Something that was interesting was the daily range was really small at this point. So it was likely that we were going to get the daily range was going to double. Usually, if it's going to do that, it'll do it with a measured move in either direction. I don't know if we didn't quite get there. It was interesting that we got a breakout to the downside at 57. We got a new low of the day, And then we got a new high of the day. That's relatively rare. 23, it's follow through for the Bears, but they wanted a bigger bar closing on its low, and they did not get it. 24 triggers above 23, so essentially a double top or a double bottom with 20. But this is not very good. I don't think you're buying above 20 unless you're buying more at the low of the day. 25, a bear bar, but a big tail on the bottom. Could be 19 spike. 19 might be big enough for 3 legs down, which we did end up getting. 26 follow through for the Bears, but big tail 25, big tail 26. It's better to wait. And then disappointment 27, break out of the 18 bar range, but it failed. Big tail on the top and the bottom. I think better to just be flat right now and see what happens. The Bears, we just got the breakout to the downside, and we have triggered the sell on the daily chart. A lot of times when something, on this type of sell, it's this. I kind of related it to this type of buy. But when you're taking, a buy against a tight channel or a sell against a tight channel like you are here, you want the trade to work relatively quickly. So if you think about it from the perspective of not a 5-minute bar, but from a daily chart, for the most part, traders want to see this bar get pretty big pretty quick. And if it doesn't do that, so basically if we don't get a strong sell-off here, what are they going to do? They're going to exit the trade. And that's exactly what happened down here. Is it wasn't doing enough. And then traders realized that it wasn't doing enough on the daily chart. So we're getting relatively close to the end of the day at bar 60. And, it's not really a big bear bar. Let's just see. So how far below the low of the day were we? We'll call it on the close of 59, the lowest point. We were only 7 points below. So at the lowest point, we're most of the way through this bar. And we were right here for the Bears, essentially, or a little lower. But you make it the point. We were in this area for the Bears. If you're, 70% of the way down with the bar, think of this as a 5-minute chart and you're like 3.5 minutes into the bar and it's still hovering, just below your entry price, a lot of those traders are going to try and exit. And so that's exactly what caused this rally. Additionally, I think that, it's very possible that on Monday, if we get back to below this low, traders who sold it and held through the bar will be disappointed and buy back their shorts. So it'll be interesting to see if that turns into support. 26 outside down. Good for the Bears. Come on. Outside down, good for the Bears, but they need one more bar. This could be a wedge, 23, 20, 26, 28. And you can see we never end up trading below 28. I still consider 29 an outside bar. So I think of this as an OO pattern, 27, 28, 28, 29. And I thought since it's an OO, reasonable to buy above 29, taking a chance we've seen the low of the day. Again, the daily range should double, and I thought the 77 close was going to be a magnet. So reasonable to take the buy. Our traders who buy, willing to scale in lower potentially, but I think the problem is, 29 closed right at the moving average. So we might find resistance relatively soon. Additionally, you're buying towards the middle of the tight trading range. So the pattern is good, but the context isn't all that great. And, look at the day so far. Just have any stop orders really gotten good follow through? No. So this is probably not going to be the first one to get good follow through. Follow through on 30 is okay, but not what you want. And then 31, a relatively disappointing bar. There would probably be sellers towards the top of here since this was spike, pullback channel. The top of the channel was probably going to be resistance. 32, a 50% pullback essentially. And disappointment on 33, an inside bar. It's a high one for the bulls, but it's not very good because it's a bear bar. 34, big tail on the top. Sellers above 33, which is not surprising since it was a bad high one. 35, a bear bar, but a big tail on the bottom. It could be some sort of 2 legs down pattern. And then an inside bar 36. So it's a high 2 for the bulls, but really not very good. The Bears, it's a low 1 short in their bear channel, but again, it's just a trading range. 37, a bull bar, closing kind of near its high. It's a high 2. So bulls want it to essentially be a breakout pullback from 29, but I don't think it's really going very high. You probably have to have a pretty wide stop if you're buying above 37, because we can easily test down to the buy climax low, which is the 29 low. A doji bar, 38, and a lot of the traders who bought were disappointed in this and they just got out, and that's causing 39. Others were willing to buy more below during 40, and that's exactly why we got the big reversal up. 40, one of the better trades of the day, nested wedge. So 1, 2, 3, or you could say, 1, 2, 3. You could argue failed breakup below a wedge, and it was a wedge here. So I saw a wedge here and a midday reversal since bar 40. and it's just some sort of, you could argue this is a bear trend, a trend line break, and a lower low major trend reversal. So I thought bar 40 had a lot going for it. However, what's the problem, right? The problem is this has been a really tight trading range day all day. So is this going to be the first bar to get really crazy good follow through? I don't know, probably not. So I thought it was a good trade, but you kind of got to hesitate at the same time, realizing that, you have to be really, really, really picky with your trades today. Again, I thought 40 is a really good trade, the best trade of the day, but you just have to be careful with that. 41, follow through for the bulls. 42, follow through for the bulls. So, 3 straight bull bars, always in long, probably some sort of buy the close. But at this point, we're getting towards the top of this range and we're going to start to go sideways. And you can see 43, 44, 41, 42 was the spike. 40, 41 was the spike, and 42, 43, 44 is just going to be some sort of channel on a lower time frame. You can see what we touched, right? The close of bar 30, since it was a couple of bull bars and this was the top of the spike on 30. Sometimes the second leg comes after we trade below the low of the spike. So you can see we did touch that close of 31 and then sold off. 45, a bear bar, but a big tail on the bottom. A lot of dojis. I think, the probability is more neutral. It felt like the edge was kind of gone from buying above 40 at this point, and the probabilities had shifted back to neutral, and we were in a pretty even area. 46, I think, is bulls dumping longs and just scalping out of the trade. If you bought above 40, it went your way immediately, so you had zero true risk. It was probably okay to just take, the 3 or 4 points. I was kind of surprised that buying above 40, traders were not able to make 5 points. I thought they would be, but they were not. It's something to notice at this point too is this price level. It's a little bit above the open today, but traders are obviously paying attention to it. And I thought to myself that until we broke far above this, in this area, I was not willing to buy unless we started to get a strong breakout above this area. Inside bar 47. Pullback, breakout pullback for the bulls, high 1, but not very good. Good bull bar closing near high 48, but I don't really think I want to buy. This seems not great. I thought if we were going to rally, I thought we might pull back, but the thing was, I thought buying above 40, it was okay to look to buy above 40 and buy more lower. But when you get the immediate rally, sometimes you just end up having to scalp out because traders were hoping that we were going to go a lot higher, a lot faster. So once you have, the 5 straight bull bars, it's good enough for a second leg, but let's see the pullback versus if you bought above 40 and started to go sideways immediately, I thought we might get another signal. So 50, or I think I was on 49. It's a double top for the bears, but you're selling in the middle of a tight trading range. I'm not taking that trade. 50, big outside up, but you're buying high in a trading range, and it looks like a second leg up, maybe a second leg trap. I'm not buying up there. 51, a doji bar, disappointment. I don't think anything to do up here. You're too high. 52, a bear bar closing near its low. Good for the bears. Potential 2-legged pullback. So you can see 46, maybe the start of something for the bears, and then a 2-legged pullback to the high of the sell climax. But again, it's the middle of a tight trading range. And the bar ends up never triggering 53. If you had bought the close of 51, disappointed 52, you could have used 53 to get out. And then a doji bar 54, and a huge bear bar closing near its low 55. I thought big enough surprise on 55 that we were probably going to get a second leg down, and this could be the start of the move down. I thought that, I was thinking about the daily chart bears, and if we were going to go, it probably needed to be now, except you get a disappointing follow-through bar on 56. So that's not what you wanted to see if you're a bear. This makes me think more of a trading range. You do have an open gap at the 54 low, but again, I'm starting to think this is more of a trading range. Big bear bar closing near its low, 57. Good for the bears. But why does 56 exist? Why is there a bull bar? It's making this look like a couple legs down. And then again, 58 bull bar. So bear bar, bull bar, bear bar, bull bar. So really looks like a wedge to me, a parabolic wedge. And then disappointment 59 with a big tail on the bottom, because anyone who bought below 57, disappointed 58, probably got 1-to-1 of their true risk, just about a little bit short. And then 60, a reversal up. So inside bar, so better for the bulls since it was an inside bar. I think okay buy 1, 2, 3, parabolic wedge. We should at least get to this low, if not close the gap with the 54 low. Remember, it's a trading range, right? So in trading range days, gaps closed. So we'll probably get at least here and close that gap. And it's pretty reasonable to think we're going to get all the way up to here and close that gap. So a reasonable buy above 60, follow through 61, somewhat disappointing. It is a parabolic wedge, so it might be a little more sideways to up, but you can expect at least 60% chance of 2 legs sideways to up. 62, follow through for the bulls. 3 straight bull bars, so probably buyers below. And you can see there were buyers below. One of the things traders will do is they don't want to get trapped buying above 60, so they wait to see when we have follow through, and then they enter on a limit order around the 60 high or even the 60 close. You can see they were able to get. And then a lot of traders buying, causing 64. If you buy 64, it's probably okay. The bear argument is second leg trap. But if you'll notice, instead of selling out at this low, sometimes what'll happen is it'll touch here, and then the market will immediately sell off. And instead, traders bought more. So we closed above this low, which was a sign of strength. And we basically closed like on the moving average. I don't think we quite closed above it, basically right on it. Follow through 65, consecutive bull bars by the close. Maybe we're headed up to yesterday's 77 close. If this, this reversal was really, it was relatively steep, so I wasn't as convinced we were going to get here, but I still thought there was a reasonable chance. Follow through 66, probably still by the close, but getting dangerous. You're getting pretty high here. 67, a doji bar, meaning the by the close will likely come to an end soon. Another doji, 68, 69. They're, 3 straight doji bars, so the by the close is probably going to stop pretty soon, and you're expecting a trading range. We could easily test down all the way to the 67 low, since this is a trading range, and in trading ranges, you can easily test the bottoms of channels. And this was the spike, and then the channel started here. Maybe it was some sort of leg 1, leg 2. Whenever you get a spike, 60% chance you're going to get some sort of measured move. So you can see we got the leg 1, pullback, leg 2. So we did get a 2-legged move up. And then rally, breakout attempt 70, 71, but really struggled to get above the high of the day. And then 72, a big doji bar. We traded below 72, but probably buyers below, since this was a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bar bull micro channel. So there are buyers below the first reversal. And you can see I think this was where we decided we were not going to hit the magnet. We had 73 happen, so that that the first reversal down is going to fail. So traders bought it. And 74 was a big decision bar in my mind. If 74 had closed up here, you can see it was trying to rally, but traders, instead of buying, they had lost faith and they ended up selling out of their longs up here, and that's what caused this. But if we had a bar closing somewhere up here, I think a lot of traders would have bought immediately and we would have rallied pretty quickly up to here. But instead, we got a disappointing bar, so traders exit, causing 75, second leg down 76, and then we tried to rally at the end of the day, but it was a little bit too late. Stop orders today, probably 12 was fine, but you got to find a way to get out somewhere in here or a little bit below 18th, the latest. I would not buy 20, and if you do buy 20 and you see 21, you probably just get out, or you add on below here. I thought 29 was fine, but kind of hard to get out in here. I'm not sure. Maybe you get out at some point, try to get out to break even and look to buy again of a bull bar. 40 was a good trade, maybe buy the close 41, but back to a lot of the problem with today is the middle of a trading range. I thought maybe sell the close 55, but didn't trade below. I probably wouldn't sell 57. I thought 60 was a good trade, and then it's buy the close all through here, and just hold through that. For the daily chart, this is the weekly chart. On the daily chart, like I said, bears want the failed breakout of the high and for this to turn into a trading range. It probably is. This is probably a leg in the trading range. That is probably a leg in the trading range. I'm not sure how much higher we're really going to go here. Again, I think this is an exhaustion gap. So I think that we're coming back. Even if we trade above this high, I do think we're coming back to this high. I think, at least 60% chance that that's an exhaustion gap. The weekly chart, so good for the bulls. Were they able to close above the all-time high? They were, so bullish. Very good for the bulls that they were able to close above that high. However, did not close on its high, and after this, I think more sideways. So I'd rather wait. We aren't really getting that close to the end of the month, but the bears are going to try and put a big tail on this bar, and the bulls want a really strong close. I think this is probably going to get a second leg sideways to down, but I don't think it's going to go all that far down. The big question everyone's asking is, are we going to close the gap with that high? We broke out strongly above the price and never pulled back to it. So we'll see.